Yo, what's good, my people? This is E4CFX, and I know you're in the right place at the right time. Quick one, guys. Today we're gonna be talking on unintentional traps that stop traders from being profitable. So stay with us. We have our lovely guest, Tony George, and we'll be coming up on stage. Um, the way we met. Ah, you're alive now. What's up? Seen you already. You come and take over where we stop.
Yeah, I'm out on Sunday, 2 o'clock in a dot. A very well report go work.
All right. As if you just come in, you mute yourself quickly. All right. So let's get started. I'll be inviting him in. All right. We have him here. So I would like him to come up immediately without wasting time. Mr. Tony, you're welcome. All right.
Hi,
Let's
hello, good evening, everyone. How we doing?
good.
All right. Amazing. Thank you so much, Mr. Enoch, for having me here. It's really a pleasure speaking to your community on a few things. So, guys, I want us to just rub our minds together as traders. I believe everyone here is a trader, right? I believe everyone here is a trader.
Yes,
Guys, why
yes.
why why are we why are we why are we so
Yes, yes.
unresponsive? All right, amazing. So I've been given an opportunity to speak about psychology in trading, how traders can actually the little things that traders do that um that get them to lose their money, and how they can also avoid all of those mistakes. But the energy in the house is not matching my own energy. So I do not want to look like the crazy person because most times when I handle webinars or when I handle physical training, for me, I can always come on board with a lot of energy. I shout, I talk, I engage. So if I want to do that in a room that is so cold like this now, you people might be looking at me like, is this person all right? What-
You think we have been waiting for you since. Some people left and they
Are
are
you
coming back
serious?
again. Yes, we've been
Are
waiting
you?
for
Wow, wow, wow. I thought we agreed 8 o'clock now. I did not come too late.
No, you came a 2 minute a minute late and 30 seconds.
All right, so amazing traders, thank you so much once again for having me here. My name is Tony George, and I'm also a forex trader like you. Nothing special. All of us with the hustle this market together. Just know that, every one of us with the hustle this market together, and there's nothing special about any one of us. Whether you have a Lamborghini or you do not, whether you've bought a house or you've not, whether you travel constantly or you do not. The most important thing that you should know, which I would start with, is that I want to let you know or remind you that being a forex trader, you are an international businessman. All right. You are trading in the same market as the very serious investors over there in the West and in Europe. You are an international businessman. So whenever you open that chart, do not treat it like do not treat it too common. Whenever you open that chart, do not look at it with a
Mr. Tony,
mindset. Yes, can you hear me?
yes, we are actually live on YouTube. Let me paraphrase.
Mm-hmm.
Uh, you are a busy, you are a very busy person. So let me come again.
Okay.
The topic we are teaching on is unintentional traps that stops traders from being profitable. So he
Sure.
mentioned little things. So, but those little things are big things now. He has kept some people trading for 10 years. Oh. So please,
Yeah.
let's
Yes.
call it big things that which
Yeah.
traders doesn't know. Okay,
Mm.
let's continue, sir.
All right.
Yes.
Thank you for that. Actually, I will be presenting what I have prepared, although the title is not exactly the title you've given me, but the concept, the idea, and everything still addresses the exact same topic that you've given me. So
Yes.
this is just an introduction. So guys, what I'm saying is, whenever you open that MT4 chart or MT5 chart, please do not treat it too commonly. All right, do not treat it too commonly. Whenever you open that your MT5 chart, revere it. Okay, look at it carefully, and anyhow you would how will I paint the picture now? Anyhow you will treat something you cherish so much or something that means too much for you, that's how you should treat your MC5 chat, because that is your office. That is what makes you the international businessman. All right, so once again, thank you for having me. I don't know, I prepared two things. I am thinking I will just go through the first one very quickly, and then the second one, which I would then take my time. I will then take my time to um discuss with us. Okay.
Okay, sir, you can go ahead.
All right. All right. All right. Just give me a second.
I made you the host, so you can,
Share my
share
screen, right?
like yes, if you want to.
Okay. So for the first presentation that I would make, I'll just run through it because I just want us to just have an idea of it. I'll just quickly, just quickly run through it, and then the second one we will then take our time to carefully discuss. All right. So the first presentation is the right mindset in online trading. All right. The right mindset in online trading. All right. Why I said, because I don't know how much time I have, I'll just quickly run through this one, just very quickly, very, very quickly. And then the other ones, we can then have time to discuss.
You
So the
have,
right use of
almost 55 minutes now. 55
oh right.
minutes.
Oh, amazing, amazing, amazing. I may not even exhaust it then. So the
Yes.
right use of trading education is rewarding to a trader until the wrong mindset actually develops over time. All right. Most of us, when we learn a strategy or when we learn a new thing, all right, can everyone hear me again? So sorry, I think I lost my internet for a minute or so. Please
Yes, we
confirm
can
you
hear
can.
you.
All right, amazing, amazing. Thank you, thank you. So when we learn a new thing, right, it gets us excited. Most times we go back to use it in our charts and it actually does work. But over time we find the same thing not working again. What could be the problem? It works until the wrong mindset begins to develop over time in our trading psychology. So results for the right forex education come with execution with the right mindset. The right mindset. The right mindset. So bad habits once developed becomes difficult to replace with good trading practices. It requires a lot of hard work to overcome. When we used to say that this particular adage that says that um oh god, it takes greater effort to expel bad habits than it will take to inculcate good habits. That's how it is. So sometimes you just jump into the market, you don't calculate your lot size, you don't calculate your stop loss, and you feel that you're just doing the right thing. You're not doing the right thing. You're actually building a wrong mindset that over time is going to disturb you greatly. So you might just introduce yourself, oh guys, I've been trading for 10 years. You've been trading for 10 years, but these little forces that you've built over time are the things that are hindering you from moving forward. So those things, we need to address them in this class. Okay? Trading is a skill that needs time and dedication to perfect. Trading is a skill that needs time and dedication to perfect. There is a wise quote. There is a quote from a wise man that I love so much. That wise man said that I fear not the man who had practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. I think it's Bruce Lee. It's Bruce Lee that made that quote. So he said he does not fear the man who has practiced 10,000 kicks, all of them once. That is how he had practiced all the 10,000 kicks. But he fears the man who had practiced only one kick for 10,000 times. All right. Dedication, focus over time builds enormous skill that gets you through the market and makes you a profitable trader. All right. So let's quickly go into them. Number one is adopt a growth mindset. No, now we are talking about the mindset, all right, that affects your psychology and what you should do. All right. So number one is what? Adopt a growth mindset. Adopt a growth mindset. The belief that you can develop your trading skills over time with practice and experience. That's the mindset that you should have. All right. So most people, when they come into trading, they are looking at how much am I going to make? How much am I going to make? How much am I going to make? But have any one of you ever sat down to say, how much will I improve today? Or how much of my skills will I improve or develop in the next 1 week, in the next 1 month? If traders should begin to set targets for themselves, for their growth, for their improvement, the exact same way that they set targets for how much they would make. I can tell you that in the next coming 2, 3, 4, 5 years, we will have better traders, results, traders with results all over Nigeria. But most times we focus on the wrong part of things, which is how much am I going to make today? I'm not saying it's bad, it's not bad. But what I'm saying is you should learn how to, over time, develop your trading skills and the practice. So fuel your trading journey with commitment and motivation. Have a strong vision of success in your trading, become consistent, have a trading plan, and seek mentorship when you need to. No man is an island. Early 2 days ago, today is Thursday. I think that should be on Tuesday. I posted a buy setup on USD card for on my WhatsApp status. Posted a buy setup, and it's going to be a swing trade, a swing buy, because I noticed that price broke above a structure, then retraced back, a resistance line turned support, and then again, when prices came back, it came back to the resistance line, which is like break and retest. Now, on that same retest zone, I noticed that there was a a mitigation block. And I for one, I love mitigation block. I don't know why. Most times when I see mitigation block, it's as if I lose my sense of reasoning. So when prices came back to that mitigation block, and it's a very strong mitigation block on the daily time frame, I just said, okay, you know what, I did not see prices clear liquidity. Normally I would find, oh, prices must clear liquidity, prices must do certain things, but because it broke above structure, came back, retested, resistance on support, and then on that support where it is retesting, it's a mitigation block, I just gave the buy signal. So one of my friend in Port Harcourt now reached out to me and said, he's my namesake, by the way. His name is Tony George as well. So he reached out to me and said, my friend, this thing you posted, I have a different bias. I think USD card is going to sell more. And then he started apologizing. I'm sorry, I usually do not like to. I said, no, 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 no. He said, because you have been longer in the market. When I talk about Forex now, you are like my senior colleague all round. You know better than I do. You've run a brokerage firm. You are also running a brokerage firm currently. You've run an academy. You've trained more people than I have trained. You've handled bigger accounts that I said, oh God, leave all those things. All those things now portfolio way you manage to know because you know me, right? Forget about all of those things. I am not beyond mistake. So if I post something and you feel that, oh look, this thing there could be error in it, call my attention. I am willing to learn. And after pointing out a few things that he observed, I appreciated him, and I also looked. I said, oh yes, it's true. This, that. You understand? So nobody's above mistake. So always look for a mentor or look for an accountability partner. All right. If you feel that you know it too well, look for an accountability partner, because no matter how you know it, you need somebody that sometimes double checks or confirm the trade setups that you take. All right. So the next one, learn to calm down when you are under pressure. Learn to calm down when you're under pressure. These are some of the mindsets that as a trader you should develop. So sorry, these are the mindsets that you should develop as a trader over time. Sorry, just give me a second. All right, amazing. Thank you. So these are the mindset that you should develop as a trader over time that makes you profitable. Learn to calm down under pressure. Embrace losses like profits. I know that would sound somehow hard, but yes, embrace losses like profits as well. So you're going into a market that has two outcomes. It's either it turns profit or it turns what? A loss. Why should you always believe that it would always be profit? Losses are part of the game. Losses is not a sin. Losses does not mean you don't know how to trade. Losses does not mean you're a loser. No, it doesn't mean at all. So also, as much as you look at the profit area, learn how to also accept losses whenever it comes. All right. Be bold to cut losses and take profits. This is one problem that is affecting a lot of traders, including myself with nearly 10 years experience. I will calculate my ideal stop loss. I have like three different ways I calculate stop loss. Is either I use the swing points, all right? Is either I use swing points or I use the um, average true range, all right? I try to know the average true range, and I also calculate maybe by the percentage I am willing to risk, right? So just different ways that I usually calculate stop loss, but the very usual one I do is using natural swing points on my trade. Now, when trade When your trade idea becomes invalidated, ladies and gentlemen, please accept the loss, cut it, and go. Sometimes our stop loss is at say $50, and prices is getting to our stop loss. We just adjust the stop loss and make the stop loss all of a sudden we now make the stop loss $100, hoping and believing that the trade is going to come back. In that process, we even add more trades. Before you know, $50 that we would have embraced and go away, we would have lost $500 on that trade, and we will start regretting. The market is always right. Only the trader can be wrong. Whatever market does, I have seen in my little years of trading, I have seen where my one of my entry strategies, which is over like 85-90% accurate, I have seen it fail again and again. Not like it failed once in a blue moon. Sometimes in a row like this, I have seen it fail, and I'm like, what is happening? What is really happening? So the market is always right, no matter what the market does. No matter what the market is always right. Only you as a trader is wrong. So try to always accept the losses whenever they come. Calculate your risk in the market to avoid mistakes out of pressure from losses. Revenge trading is a no-no already. The next one is trade with realistic expectations. Trade with realistic expectations. My goodness, this one, a lot of traders, especially Gen Z traders that I have seen, if they put their risk to reward on trading view, if you see it, and myself, I will not be asking myself, it's like I still have a long way to go. Some Gen Z traders will do 1 to 15. They are risking 1 to get 15. That's one that they are risking could be like 2 pip stop loss. And I'm like, what? 2 pip stop loss? The best I do, sir, is like the best I do, maybe on a low volatile pair, maybe like 15, 20 pips stop loss. But you see, Gen Z traders, they will even do 1 pip stop loss for you or 2 pip stop loss. And you'll be like, do not be moved with all of those things. Set up a realistic expectation. Stop loss is a buffer. Stop loss should give buffer to your trade. When I mean buffer, stop loss should give enough room to your trade so that anyhow prices wants to misbehave before it eventually goes your direction, it has enough room to do that misbehaving. All right. So do not be carried away with unrealistic expectations. All right. Trading is not a get rich quick scheme. It is not a shady investment to earn you super normal profits. No, it is not. It's a gradual growth process. So embrace it. Okay. Trade to earn a living, not to make X dollars in Y days, not to make $1,000 in 1 week. No, no, don't do that. Our host for today, I remember organizing an event in Lagos some 3 years ago or so. He attended that event. We called that a signal, and he made $800 on that signal in less than 20 minutes. Sir, can you remember? I believe you can still remember the event we had in Ikeja. So some people began to be like, "Oh my goodness, they were so excited. They were so baffled. They want to make the same $800. It doesn't work that way, okay? It's a gradual growth process, all right? So trade to make a living. Don't put too much target for yourself, all right? If you put too much target for yourself, you'll find out that you will even end up losing a little more than you expect. So let the trade setup define your trade size, yes, where your stop loss should be and your take profit. Okay. The next one, be confident in your trading, but watch out for overconfidence as well. Be confident in your strategy, be confident in your entry setups, be confident in what you know that you've been practicing, but also watch out for overconfidence. Remember, I have earlier said that the market is always right no matter what it does. It is you, the trader, that can be wrong. All right. And that's where the overconfidence comes. Oh, this is my type 1 setup, type A setup. Now it's no longer, now everybody is type 1, type A, type this, type that. Type A setup is 100% accurate. Once it appears, I risk everything. The market can always do whatever it wants to do. So drop the habit of following others blindly. All right, it's okay to use for mentorship, but not absolutely, okay? Trust yourself in your analysis, trade execution, risk management, and keep improving every day. Keep improving every day. You can only find success in the market through you and not someone else. Through you and not someone else. There is there is lately on social media, especially on Facebook and Instagram, there are some guys that are popping up right now, and they say they developed an AI that can trade for people, and they are using a lot of your favorite influencers to promote what they are doing. I'm not saying what they are doing is bad, it's not bad, but one day those robots will eventually fail. One day those robots will eventually blow accounts. They can make money, but robots are not 100% reliable. All right, maybe just one little glitch and everything you've made completely gone. At that point you have to start from square one. Where do you start from? Looking for the next robot? No. That's why what I know now, nobody can take away from me. What I know now, without any robots, without anything, give me my phone or give me laptop. I will set up everything. I will understand the market, where market is going, and I can execute. That's the best thing you should go for. All right. So your success will be in the market, will be through you and not someone else. So find your balance in trading and isolate it. Your trading style, your trading edge, your strategy, your portfolio, your risk management, everything. Practice and practice and practice, and keep getting better with practicing. That's the only way you get better, to be honest. That's the only way you get better. Only with what? Only with what? Practice. Only with practice. So just keep practicing. All right. The next one is be resourceful and eager to learn. Be resourceful and eager to learn. So get the right education first. If you're a beginner, keep learning even with experience. Market is actually dynamic. Market is actually dynamic. Listen, if you don't pay money to learn, if you don't pay the price to learn, right? Whether you pay money to learn or you pay price to learn or whatever thing, pay it. All right? If it is attention, pay attention to learn. Whatever thing it is, whether it is money, price, attention, whatever thing, please pay that thing to learn. I know I'm saying it because if you don't pay to learn, you go into the market, you will definitely pay times 10 to the market, because the market is not a place, the market does not forgive anyone for not knowing. The market does not sorry anyone for not knowing. The market does not forgive anybody your mistake. You know, the market is like the Bible portion that says that if you break the edge, the serpent will what? Will bite. That's the market. It does not forgive. It does not forgive even your slightest mistake. Oh, I was supposed to place this trade with 0.5. I mistakenly clicked 5. It has executed. Let me give people one gist. What happened to me almost very recently, maybe early this year. So I saw a very nice setup. All my entry boxes had been checked, and this was happening somewhere around 11 p.m. All right, and out of excitement that all my entry boxes were checked, I just jumped into the market, and I did not even check the account I jumped, because usually I place trade first on my small account before I go into my big portfolio. But that day, out of the whole excitement and everything, I just went straight to my big portfolio without knowing. I was thinking it was my small account that was still logged in. I did not know that I've not changed it. And then I now okay, sorry. I calculated with a big portfolio and got my lot size, but I did not know I've not switched to my small account. I've not switched to my big account. It was still on the small account. So I used the lot size for let's just say something like I used the lot size for $50,000 to trade on my $4,000. That account blew that night. That night, only spread alone. Only spread alone. Now, whenever market opens, all right, anytime market opens on the Asian session, because of low liquidity, you'll find out that you find out that the spread will be some of the pairs, the spread will be really crazy. That account blew. So don't get too excited. Market is not running away. Okay? Market is not running away. So anything market does not forgive. Oh, I've already laid a foundation on that. The market does not forgive. It does not forgive. It does not forgive. It does not mercy. It does not pity. There's nothing like, hey, yeah, you've not learned, you have not learned this one. I come back, come and take this your $50 you lost. It will not happen. It will not happen. All right. So at every point in time, ensure that you learn, continue to seek more knowledge from whether mentors, anybody. Some of you are in the habit of saying that, me, no Nigerian person can train me. No Nigerian. So you're always looking at those white guys. Okay, oh, there's no problem. There are Nigerians that are really good in this thing. I have learned from a couple of Nigerian guys that changed my mind completely. In fact, some of my entry methods that I have refined and modeled, the basics of all of those strategies and entry models, I learned from Nigeria. Young, very young. I'm even older than him. If I mention his name, now he's a very popular forex trader. You will know. And I learned, like, I paid for his course. This time I'm telling you, it's not like I learned it so many years ago when I was upcoming. You know, like everybody know me. Everybody know me in the industry. I still paid. I paid $200 to be in his master class just to learn that thing. So anybody, even somebody who is like 15 years old, can have the information to get your trading to the next level that you do not have. So do not look down on anybody. Keep learning from everybody. All right. The next one is discipline. Discipline. Every forex trading mentor will mention that you need discipline to be a successful trader. So form a trading plan to be the basis of your discipline. All right. Remember, I was just giving you a gist, and I said that how I lost that $4,000, right? All my entry boxes. So I have an entry this in most times, depending on the strategy that I want to use to enter the market. I have like 3 4 strategies. So all of them have entry models and boxes to check. Okay, for this one I need to find liquidity. Liquidity has to be swept. Then I need to see engineered liquidity. I need to see protected low. I need to see this. This one, my entry model is Quasimodo. Okay, this one is maybe trend lines. I need to see break of structure. I need to see this. I need to see that. I don't know if you understand. So know your entry models, and that's the discipline, part of the discipline we're talking about. But for some people, every single time they pick up their phone, they must enter a trade. Every single time they pick up their phone, they must enter a trade. If you're an international businessman, mistakes are not forgiven. All right. You know now, you know. If you're an international businessman, you need to exude a lot of discipline. You want to be like Tony Elumelu and the rest of them who are international businessmen. Check those guys, their routine. A lot of discipline. So form a trading plan to be the basis of your discipline again. Have the discipline to maintain your trading strategy even when you get losing trades. Again, I'll add to this. Don't pressure yourself. Don't pressure yourself that you must take trade every day. It's a lie. You mustn't take trade every single day. Guys, guess what? I have an account because I work with a broker, or because I have a broker that I work with. Brokers, we need volume. So definitely what we will be telling people is, of course, trade more. We will try to find trade opportunities literally every day. I'm just giving you some secret now, inner secret, but please don't tell anyone. However, I have an account that I am trading as me, Tonye, not broker pressure or anybody's pressure. Should I shock you? That account, sometimes I take only like 3 trades in a whole month because that's the only opportunity I've seen in the market. I take only 3 trades in a whole month because that's the only opportunity I have seen in the market. Only three. And sometimes only that 3 trades can give you 9% in the month. That 3 trades can give you 15% in the month, can give you 10%. So do not be pressured. I know you need money, you need that, you need it. Fine. For some people, they can find opportunity every day. Like this, my friend from Port Harcourt, I told you. Every single day, this guy gets opportunity. And sometimes he will tell me, scale down to 5 minutes. I say, bros, I need to follow you go 5 minutes. I don't get any business for 5 minutes, you know. I don't have any, it's too small. For me, in 5 minutes time frame is too small. Even 1 hour is is 1 hour is the last place I will stop. Or maybe occasionally, once in a while, if I want to over refine my entry or my zone, I get to 15 minutes. I have no business in 5 minutes or 1 minute time frame. So discipline, discipline, discipline. Let me not overemphasize that. Patience also, understanding the forex market takes time. So be patient to identify high probability setup, which is what I've just told you. Can be 3 trades. Sometimes in a whole month, you may not even see a very good opportunity. And me, I'm not trading only one pair. I'm not like those traders that will tell you, oh, I have only 3 pairs. If you open their watch list, you see only 3 pairs. Me, I have all the major pairs. I have gold. I have indices, right? I have all of those things, but most times I don't trade anything that is very fast paced or fast moving. I really don't buy it. I really don't buy it. So I don't trade gold too often. Like right now, as I talk to you, I have a very strong sell setup on gold, and it has even triggered 2 days ago. It's still playing out, right? It's still playing out. It's going to be a swing trade, long gold, most likely by January or latest by January next year. Gold will be hitting $3,500. It wouldn't go. It wouldn't really go up much. But until then, it's just a forecast, right? So it's a sell setup. But guys, guess what? I'm taking a very low risk on it, right? So, but then it's not something I trade too often. Gold, especially. If gold does not check every of my boxes for entry, I would not trade it. I can just play around with currency pairs, but not gold. Not also indices. So be patient, cultivate the habit to wait for the right signals from your trading strategy. Hasty decisions often lead to losses. Before I continue, let me tell you this. Patience is actually a strategy in trading. When you talk about types of strategies or the strategies that we have, patience is also a strategy. Okay? Patience is also a strategy. Please write it down somewhere. It is a strategy. The ability not to get into the market when it is not right, it's a strategy. So take time to do your market research and analysis. Be a conservative trader, not aggressive. However, you can also be aggressive with very tight risk management. Again, I've said all of these things. Thank you so much. So let me just quickly go into the other one that I have prepared for today's lesson, all right, which is mistakes to avoid in online trading. So this is very similar to the topic that I have been given. All right, the topic that I have been given to speak on. Let's not. Okay, okay, amazing, amazing. Sorry, just give me a second. Sorry. A very important email just came in and my eyes just went to the notification. All right. So mistakes to avoid in online trading. Mistakes to avoid in online trading. Guys, I hope we're ready. Please, if we're ready, you're still with me. Please use the comment section. Type the word ready. Type the word ready, 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 ready. I think from every one of us, so that I know that you're still with me, so that I can continue. If you're still with me, please type the word ready in the comment section. Let me know I'm not talking to myself. All right. All right. All right. All right. All right. Amazing. Thank you. Thank you. So, mistakes to avoid in online trading in the financial market generally, mistakes to avoid in the financial market. The challenge of forex traders is to find opportunities in the dynamic market. I hope we know what is the dynamic market. Dynamic simply means that the market is constantly changing. All right. Dynamic simply means that the market is constantly changing. And a lot of the things that you might know now, it would have changed in the next 6 months. It would have changed in the next 6 months. Before I became a profitable trader, I used to hear the name a Jimmy the profitable trader. Then I have not known Sir Jimmy too well. I've not known him personally, right? But I used to hear Jimmy the profitable trader, Sir Jimmy, some people call him Pastor Jimmy. And one of my students back then, I wasn't too profitable, but already I was teaching some people what the little that I know. So one of my students back then now went to enroll in Sir Jimmy's mentorship program. He came back, started looking down on me and stuff like that. But that's, by the way, the gist I want to give you is, apparently I was told that Sir Jimmy developed a bot that was used to milk a particular asset on volatility, on synthetic assets. Okay, on synthetic assets. So Sir Jimmy developed a strategy, no more or less not the bot, but a strategy. And that strategy that time was like a hack to that particular asset on synthetic, one of those synthetic instruments. And everybody was cashing out until it wasn't working again, right? So I heard that that period he made a lot of money because it was a hack. It was a hack. He just hacked the movements, or he just understood the dynamics of the market at the time, and it worked, and he made a lot of money. So the market is constantly changing. It's a dynamic market, so it requires you to focus to separate market action from emotional responses. All right, you cannot control the market, but you can control when to buy or when to sell. That's why I said patience is a strategy. Okay, so to understand how to trade and how not to trade, let's consider a few pitfalls. When I mean pitfalls, a few things that make even the best of the best in the market lose money. Let's consider a few of them. Number one, trading without a strategy. Trading without a strategy. If we will be honest with ourselves, and if we will begin to look in depth, do thorough analysis of ourselves while trading, we will find out that a lot of us, we have strategy, but most of the trades that we take that gets us into problem are without strategy. Oh, the market has sold, it fell 250 pips. There's no way this market can continue to fall like that, so let us buy. Whereas it fell down to a liquidity point and it wants to clear that liquidity, you'll be shocked that that day where you say market can never go below 250 points or 250 pips, that market will do 400. For those of you that have been trading long enough, you know sometimes like this. Now, I'm not talking about gold. I'm not talking about gold. I'm talking about normal assets now. Normal assets. See, anything can happen in the market. Anything can happen in the market. Have you ever traded CHF pairs? Have you ever traded CHF pairs? Uh, you will be shocked that day that the market had gone 200 pips, and then you say can never go further, and then the market will continue to do another 200 pips. You go adjust stop loss tire, you adjust the stop loss, the market will pursue am. So, so have a trading strategy. Don't just jump into the market without your strategy. Have all your entry models well defined. They say this that if you cannot explain what you know to a 5 years old child to understand, it simply means that deep down is either you do not really know it. I'll be honest, you do not really know it. So have a trading plan to succeed. The rules to guide on entry or exit in a trade. Save your time in analysis. Be straightforward. Keep it simple. Keep it short and simple. All right? It shouldn't be too ambiguous. And please, do not be, when I mean trading strategy, there's something that is currently going on. People who are using indicators now, they look down on them like it's a big sin. Brothers and sisters, indicators are not bad. For some of us, we used indicators for years. We made profits from those indicators. Is it Ishumuku? We used it. Is it moving average crossover? Should I shock you? I still use moving average crossovers till today, and I will still use it till thy kingdom come. Until otherwise, I will still continue to use moving average crossovers. You will not see it on my chart. I hide it. I can do a naked chart analysis. Sometimes, many times I do that and I take my trade. But sometimes when I want to double check, I'll just put my moving average crossover 50 and 100. so that I will know if it is a death, if we're in a death cross or we are in a golden cross. I will know. So this thing with strategy that, oh, everybody wants to trade SMC or everybody wants to trade one sophisticated. It's not about the how sophisticated your strategy is, though. It's about you keeping it simple. Are you making money from that strategy? If only moving average crossovers is what you understand and it can give you money, my brother, do not be ashamed of it. Go ahead. Put it boldly. In fact, when you put the moving average crossovers, the line, bolden it. Anybody should come and tell you, so long as you're making money, you understand it too well, you're making money. Don't look at anybody. Please don't look at anybody. Okay? Don't look at anybody. Let me give you something with I have observed with some of your popular forex traders. Right now, one of the indicators that is making wave in the industry is volume footprint. Okay, volume profiling and volume footprint. Volume profiling and the volume footprint. So with the volume profiling, you can be able to know the POC, which is like the point of what the point of control. That is where they have the highest volume in the market at the time. So that could give you an idea that, okay, look, most likely if the BFIs, that's the bank and the financial institutes, if they come back to where they left off with a lot of volume, it can fuel their next movement, right? Not many people know how to use this. There are still some people that use the RSI. In fact, I know a trader that uses one of those. I don't know if it is RSI or I think in his chart I have seen it a couple of times. Something he mixed the RSI with something. All right, but it's sha, one of those indicators that you know RSI or something. He just bought a Lamborghini. The only one out of three in Nigeria. You know, I will not mention name, but you know the person. They use indicators. There's nothing wrong with indicators. Do not let anybody
MEO.
come to pressure you. Sorry. All right. So define your goals and go after them. The next thing is trading against the market trend. Trading against the market trend. All right. Trading against the market trend. Learn to identify a trend because the trend is your friend. One of my friend back then in FXTM, um, he was a very well respected trainer in FXTM. He said, the trend is your friend until it bends where it ends. I'll take it again. He said, the trend is your friend until it bends where it ends. The trend is your friend. You do not want to trade against the trend. Trade the trend until it bends and stops there. Where it ends is where it discontinues to be your friend. Take the next direction. There are only two ways only two major ways that the market moves. It goes up or it comes down. Yes, sometimes it consolidates, but then the major ways is it goes up, it comes down. So know where the market is going. That's where market structure is actually very important. So learn all of those things. Know when to expect a trend reversal. Get an opportunity to jump in for a trend continuation. One of my role models, it wasn't really a mentor, but it was somebody I looked up to while I was coming up in the industry. He was my role model. His name is Professor Andreas Talasenas. For some of you that are OGs in the industry, you will know Professor Andreas Talasenas. He's still a friend till date. We still talk. You know, in one of his books, he said that a good technical analyst is someone who knows where the market is going even before the market starts its journey. Someone who knows where the market is going even before the market starts its journey. So, you want to be a good technical analyst who will be milking the market, learn to understand trend, structures, and know where the market will most likely stop and have the next um, bullish or bearish push. All right. Avoid picking the tops and bottoms of a trend unless it's a part of your strategy. Do you know why I say so? Why I said avoid picking the tops and bottoms? It's because those are liquidity areas, those are liquidity zones. Forget about it. They are liquidity zones. Every swing point you see, swing high or swing low, They are potential liquidity areas. So avoid picking those tops or bottoms, right? The BFIs have actually left those areas to come back and clear. So use appropriate tools to identify and confirm your trends. Whether you're using moving average crossovers, so you're using trend lines, so you fully understand market structure, that merely looking at a naked chart, you can say this market is going up. You know, internal structure, external structure, whatever is the name they call it nowadays, engineered liquidity or inducement, whatever thing, just know it. Sha know it. Okay? Shall know it. Okay. Trading without stop loss and take profit is another thing that a lot of traders struggle with. So we will address it also today. Equivalent to driving at top speed without brakes or a defined destination. That's going to be deadly. So have predefined entry and exit in every trade. Predefined entry and exit in every trade. Predefined. All right. At the stop loss level, the loss should not be a big amount that you cannot afford to lose. No, 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 no. Keep the risk amount max 2% of your trading account size. If you're having a 1 to 2 and you are risking 2%, if he eventually does 1 to 2, that's 4% of your account. In fact, for many prop firms now, you just need to make only about 7-8% and you pass that phase. So you need only 4 solid trades at 1 to 2, not 1 to 15. You understand what I mean now? No, 1 to 15. Nobody is pressurizing you to pass your prop firm account in 1 day or in 1 hour. All of those crazy things that you see on online, I'm not saying they are not real. They could be real, but what I'm saying is that do not be pressured by them. Do not be pressured by them. You see, somebody is 23 years. He said he's 23 years. He already has like three Lambo. He already has like two G wagon, one Lambo. No, two G wagon, one Mercedes AMG. He has like 3, 4 houses. He travels around the world, and it is forex. Do not be pressured. Take your time, right? Take your time. Learn the skill. Learn what they know that you don't know. All right. Don't go and say, oh, you want to catch up with them, you want to meet up with them, and then you're risking 25% of your account. That would be foolishness. All right. So have a reasonable profit target. Learn to book small profits if necessary. What I mean by learn to book small profit if necessary, sometimes you've done 1 to 1 and you're still targeting 1 to 3. Say if it does not eat 1 to 3, you will not close. The market will give you 1 to 1, come back, eat stop loss, and you do not even secure anything. Doesn't make any sense. All right. Taking bigger risk for lower reward in the market. Taking bigger risk for lower reward. Taking bigger risk for lower reward. You can't do 1 to 1. It's not going to be profitable or sustainable over time. Okay? It's not going to be profitable or sustainable over time. So before placing a trade, you as a trader should be more willing to give preference to a lower loss over a higher possible reward. Okay? In practice, however, you as a trader should tend to close profitable trades prematurely, but you should be also willing to hang on to losing trades for too long when they are wrong. All right. Have predetermined exit levels and let them be. Do not risk more than 2% of your account again, like I said. Then the thing of FOMO is also something that affects a lot of traders. We know what FOMO is now. It's a common language for crypto traders or forex traders. The fear of missing out. All right, the fear of missing out. So this is actually a situation where traders feel that it could potentially be missing out big on a golden opportunity in the market. Like again, I said, I earlier said that the market is not going anywhere. It's not running away from anywhere. For me, who is a swing trader, sometimes I see an entry, right? I see a good entry and I want to take it that time. I forget. I come back maybe the next day. Price is still moving around my entry. Market is not running anywhere. Truth is, even if you miss that opportunity, there are more opportunities that will come up in the market. All right. So no rush. Take your time. Sometimes if you can see all your setup criteria have been met around 11, but the spread had widened because of the Asian session. Wait, wait. From 11 to 1 p.m., the spread will come down by 1, 2 p.m. It will not kill you. The market will not significantly move too far away from your entry by 1 p.m. Just exercise a little patience. That's why I say patience is a strategy. All right. So this may be as a result of sudden volatility in the market and news or rumors or another trader. Don't follow all of this. Just wait. Okay. Just wait. Trading to recover a loss. Trading to recover a loss. That is what we call revenge trading. That's not a strategy. All right. That one you become emotional, too emotional. Because you lost money, you want to aggressively trade to recover your money. Okay? Because you lost money, you want to trade aggressively to recover your money. You're going to lose more money. See, let me tell you something. Revenge trading had never worked out for anybody. I have not seen anybody whom revenge trading eventually worked out fully for them. All right, so don't do it. I watched a video recently where a mother elephant was angry with what do they call the children, calf, right? With a calf or so. I don't know, is the baby is called calf? So she was angry, the baby did something, and she was so mad that she hit the baby so hard her tusk broke. Her tusk broke. And one thing with elephants and their tusk is that when it breaks, it never grows back again. Never. So it never. They're not like all those deers that carry big guns. That if it breaks by the next winter season, it comes back. No, elephants it doesn't come back. So do not use anger or emotions to begin to trade the market. You'll end up, you end up losing more money than you should. Okay. Sorry. Traders who chase after lost money are bound to make irrational trading decisions, which result into further losses. I can't emphasize that more. Then the next one is fear. Fear. How many of you have ever lost money in trading? You hold your phone to trade and your hand is shaking like this. You would think that you now have Parkinson's disease. If you've not gone through that level, I'm telling you, you are not. Yeah, we shouldn't call you a trader. To the point where you hold your phone like this, your hand is shaking. If you've not reached that level, uh, I don't know. I don't know what to say. Or perhaps you wake up in the morning and you're waking up at night and you're waking up, and the next thing you're waking up with fear. You're looking for your phone. Don't worry, we've passed through all of those stages. That's why I always teach my own students and my community that look, do not for any reason risk more than you can take, more than you can let go. To not That's the only thing that gives you peace of mind. So you don't wake up. I have woken up with force, fear, because of a trade I placed. I broke a teeth. So it's not to be done. In trading, fear is born out of lack of consistent profitability. Since a client may be lacking an effective trading strategy, it can also be born out of lack of proper risk management. Lack of proper risk management. You don't have solid risk management rules that put you in check. Fear. Fear. So what's the worst thing that will happen? Once you calculate your lot size, you calculate your risk, you calculate everything, you know that the worst thing that will happen is market will hit your stop loss. And if you hit your stop loss, you've already said, this market, I'm losing $50. I'm willing to risk $50. If it goes, then fine. So no matter what happens, you even go out, you don't even go and start checking and start checking and start checking and start checking. Okay. I think my time is far exhausted. So let me just quickly wrap up. So in trading, that's fear. In other cases, a client may suffer a huge loss on one single trade or series of losing trades, which may offset emotional balance. Clients should therefore not put to risk money that they may not be able to lose. That's exactly what I have just said. Anything that you can't lose, please do not put it. The next one that a lot of traders still deal with again is greed. Greed, the desire to wait for more profits without any supporting indications in the market. If the market will continue to go up or continue to go down and all that. No, 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 no. So it's a case where a trader assumes that since the price of an asset has been increasing, it will continue to rise. No, don't do that. Remember, I made an example earlier The market fell 200 pips. So you're thinking, oh, the market cannot continue to fall. It's now time to take the lows, buy the lows. Or the market rallied 200 pips. It cannot continue to go up. So it's now time to sell the the highs. No, 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 no. Don't do that. So greed is another thing. Representative bias as well. This is where similarity is confused with probability. So a trader seeks to replicate previous successful trades in the belief that the same success will be replicated. Traders therefore overlook to treat each trade on its own merit. They adapt trade setups, market structure is dynamic. So last month you made 12%. Last month you made 12%. So you are aiming that this month you will make 20%. So this month you eventually made 18%. So the third month you are hoping that no, if I can make 12, 18%, that means I will never fall with below those range. In the worst case, it's 12%. So you fight and fight and fight. You've already made 8%, and the month is already at 21 or 22. In the bid to meet 12%, which is your minimum rate, you now fall back. The 8% you did, you lose it in one day, even lose 10% of your capital. Doesn't make any sense, yeah? So the market is dynamic. Sometimes you can make 1% in the month. It's still fine. You can make 0.5% in the month. It's still fine. But in a long while, let's say within a space of a year, all the total profit you did divided by 12, if you can make an average of 2%, you are a profitable trader. You are a profitable trader, sir. That's 24%. I don't think any institutions will give you that money. All right. So you're a profitable trader. The next one is euphoria. Okay. Euphoria. Euphoria is a state of extreme excitement. Remember, I told you that story how I lost my 4K does. It's a state of extreme excitement or confidence by a trader after a series of winning trades, or perhaps the trader have seen something that he has been waiting for. So if that happens, it's euphoria, extreme excitement. You make mistake. Extreme excitement can make you place huge lot on your account that you're not supposed to. Like it happened to me. Euphoria can make you it can confuse you. So don't be too excited. No matter what, no matter what, even if your strategy met 100%, do not be overly excited. Do not be overly excited. Still maintain the same calmness and do what you have to do. See, even if you entered a trade and then the trade made $80,000, you scream, you shout, you are so excited, you withdraw the money. By the next time you want to enter the next trade, act as though you've not even seen $1 in your life before. Forget the excitement of the $80,000 that you made before. Okay, so you need to always put yourself in check. Negativity bias. This is where traders are absorbed into a negative emotions rather than focus more on what could have gone wrong. Okay. Um, Trading with emotions. I think I've also said a bit about all of this. Status quo bias. This is a case where a trader continues to use old strategies, old, unsuitable, unreliable strategies in a dynamic market. All right. Every single time, refine your strategy. Every single time, refine your strategy. So there is this strategy that I used to use at one of the four strategies that I was talking about, which is part of my entry models. Right. I remember I told you I have like four more strategies that I can use to take trades in the market. So one of them is the CROT strategy, which is the candle range theory. All right. So basically, the candle range theory is more or less saying the morning star and the evening star. That's candle range theory. So candle range theory is Gen Z. For we who are OGs, we know that it is evening star and morning star. Does it work? Yes. Oh yes. Oh yes, it works. Oh yes, it works. However, so I have been trading the candle range theory just the same way that every one of you would know the candle range theory. But very recently, when this my friend from Port Harcourt corrected me on the USD card trade, I now had a new idea. I now had a new idea for remodeling the entry models on that candle range theory. Before I had a completely different thing. I could find a candle range theory on 4 hourly time frame or on the daily time frame. My entry model is very simple. If it retraces back into at least 50% of the sweeping candle, that will be my entry. And then my stop loss will be below the low of the sweeping candle, something like that. But then I said, wait, how about if I see that today's candle sweeps the low of the year of yesterday's candle and closes into at least 50% of the previous candle? It has done the first phase of the setup. The next phase now is the entry phase where I will be looking for a little retracement into the sweeping candle and then I take my buy. I said, what if I now go down to a lower time frame? Let's say if I find it on daily time frame, I'll go down to 1 hour time frame and see if I can find my type 1, type 2, or type 3 entry models on 1 hour time frame if it plays out, or even on 30 minutes time frame. That would make sense. Do you know that when I began to, just between Tuesday till now, when I began to backtest this old strategy, this old method, I now noticed that, oh, it simply means that if I use this method, I will not see a lot of trade, but most of the trades I will see are over 95% accurate. So you see now, it's a dynamic market. You cannot be fixed on one thing. You cannot be bent on one thing. It worked 2 years ago does not mean it will still continue to work today. Of course, the way the market was moving 8 years ago, when me 9 years ago when I started forex, it's not the same way the market is moving now. There is more liquidity in the market now than before. So before, the market can be very nice and gentle and moving, Euro USD especially can just be moving, one direction for some time, But now, Euro USD is showing people Arab. You understand what I mean? So, try to always upgrade and tweak your strategies, tweak your concepts, and so much more. And then, last but not the least, is the choice of a broker. All right, the choice of a broker. Sorry, I used one of my very old slides, so I do not want to. Let me stop sharing. Thank you. So the choice of a broker that you trade with also very important, because why I would not, why I would talk about this, but slightly because it's not my event, right? Slightly, but I will not also promote any broker as well here. But the choice of the broker that you use is also extremely, extremely important. We cannot overly emphasize that. We cannot overly emphasize that. A good broker is as good as your strategy. All right, is as good as your strategy. So before you begin to trade with any broker, do your in-depth analysis, do your in-depth research. All right, try to know their spread. You can know their spread. You can know a lot of things and ask yourself, why are you trading with that broker? If they don't help you in any way, I mean, if their spread is not so good, some other things that you're looking for is not so good, they don't have the assets you're looking for, I mean, you can reconsider to change your broker. But I'm not promoting any broker. So thank you so much, guys.
All
That's
right.
my time.
All right. That is, please let us type in 111 if we actually, got everything he's talking about. This class is power packed. I learned a lot. Hope you jot things down. Okay,
Yes,
sir.
sir. Yes, sir. I did.
Tell us the broker you are using that is working for you. Let's see if we can use the same broker. Some brokers are not actually accepted in some countries. So, but
Yeah.
tell us the one you are using. We're gonna try.
Okay. So I know I understand you are trying to sell my broker also for the meantime. But for now, I'm working with a broker on the ground. For now. For
Okay.
now. For now. So when it is right and proper, I'll let you guys know.
All right. No
But I'm
problem.
open to I'm open to questions now. So if in case
So
there's any
yes,
question,
it's
any
question time.
idea or
I
contribution,
know.
yeah.
Yeah, I know people have questions here. It is question time. Please, um, let's ask our questions. Let's ask our questions. I like this class. That the strategy is working 10 years ago doesn't mean it will work today. And when you are overexcited and you made $80,000 today, come to the market and act like you have not made any $1. That word touch my heart.
Some people will come with Some people will come back with this with so much excitement, the same energy that they used to make the 80K does, and then they will come, they will lose 250. They will lose 250K does.
I
Yeah,
swear.
so the thing is that one thing me I always do is anytime I make some good profits, I do factory resets. If I make some profit, I do factory resets. What I mean by factory reset, automatically I tell myself that I've not made anything again the next time I'm looking at the chart. So I'm looking for opportunity to make money, you know. And that's why you have wallets. You have your USD wallets. In most of the brokers, they have USD wallets, they have NGN wallets, whatever wallets that they have. So what you may want to most likely do is sometimes if let's say I want to grow, if let's say I want to grow a $1,000 to a $10,000 account, what I would do is the early stages of trading that account, right? If I make $100, $200, I don't leave it to be in the $1,000. There's a way it messes with my psychic. It makes me think like, oh, like I now have money now. Let me increase my lot size. So I will move that $200 or $100. I'll move it and put inside wallet. I'll still be seeing one K dollars. So because I don't want to lose any part of that $1,000, I'll be extremely careful until maybe I have made like $700. I can put everything together. Now I know I have 1.7 or 1.5. So it becomes my base. I don't want to lose that 1.5. So I'll be extremely careful. But for some people, they will make 200, 300, $500. They will leave it there. So they will not be like, oh, even if I lose $200 now, it's not my capital. It's not my capital. So if I have 1.5, if I lose $300, I still have 1.2. I'm still in profit. No, I don't do that. I don't. For me, I literally do. I don't do that. So that 1.5 becomes my capital. I can't lose any part of that 1.5. That's how I tell myself. So I have
Come
to be
like see you
extremely, I
have
have
not
to be
made any
extremely
money.
careful. Yes, I have not made any money. If I lose that 1.5, I'm losing my capital. So I have to be extremely careful to protect it again until I made some more profits.
All right, so guys, I gave you people an assignment, and that assignment is number one: who is a mentor, a trading mentor? So after asking you guys that question, only few people did the assignment. I was like, wow, you people don't know that this is a psychology class, that you people need to take things very seriously with me. I am a very serious person. And when I'm starting this move, I'm not doing it on my own. There is somebody that is backing me up, which is God. If you want to ask question, go and ask God question. For me to just call out this kind of psychology class, that is my intention before I started. So I tag my own logo as your psychology before trading. So work on yourself. That is the first thing I say. When you can work on the trader, then the trading becomes a very easy stuff. You work on the trader. So the person is more important than the trading. So that is why most of the time somebody will have like $100,000 and he wants to invest, and you will be there making noise. Sir, invest in me now. Sir, invest in me. You will say no. Why? Because it is not about the trading. It is the person. The person. So it will leave every other person, and then go straight to someone that has been tested over time, someone that has track record. So you want to improve in this industry. What are we talking about? The things, unintentional behaviors that trap you people and makes you not become profitable. It is you not focusing on your person. You always want to look at this person is doing well, this person is doing well, and then you forget that your timing is different from the other person's timing. Like he said, that there was one of his friends in Port Harcourt that just tell him, you are doing this one wrong. Oh. Why not you do it like this? And then he was able to what? He was able to scale out of that because someone gave him an information. So sometimes we ignore informations that comes, because he's my friend. If he's telling me something, I shouldn't listen. So that when we ignore informations, most of the times, it makes us what becomes unprofitable. So as any information that somebody gives you, that you can see the person is doing well in that thing. You can see it, the person is doing well. All you just need is to, and another thing is, we have noise makers in the industry um, than word provers. Like, we have more noise makers than provers, because people that are just making noise and making noise and making noise, tell them, oh yeah, show me your track record. Everybody runs away. The time Kojo and what are they calling it? And one guy were having heat that time. Kojo said, show me your track record. The time Dax was having heat with someone else, he said, show me your track record. Most of them they don't have track record. They will say, show me your track record, and they will run away. All you come is to come and drag mentors. All you come is to come and talk nonsense. You like this. If we give you $10,000, you will flop. It's not because you are not you cannot trade the market. It's because of your personality. Work on your person. Work on yourself. Okay, for example, somebody is saying that I am this, I am that, and I give the person just 1,000, or that is 150K. Just after, just take this one, and before you know, the person misuse it, and I say this person is not the kind of person we can trust money with. That is how it is. How do you use money? Now, the law of making money is avoid spending, avoid consumption, Go and sit down. If you want to build wealth, it is like 4 windows. The first window is the window where you want to pay things, pay bills, and all of that. Close those ones. If you can be able to accumulate money, more money is bringing more money for you. Another money is bringing more money for you. It will take care of all those bills. So the unintentional way that is making us keep losing, keep being unprofitable, is when we are too concerned about bills, about things, about flashy things, about this, that, this. When we are